Yesterday, the euro advanced, hitting a new one-month high. Likewise, the British pound held steady at 1.2375 and gained value. Nevertheless, its bearish correction remained intact as sterling failed to break above the upper boundary of the descending channel. The focus of market participants was on US jobs data. The Labor Department reported that U.S. initial jobless claims climbed sharply to 231,000, an increase of 13,000 from the previous week's revised level of 218,000. Besides, U.S. industrial production fell by 0.6% in October after a 0.1% September uptick. As a result, the greenback slid, allowing the euro and the pound sterling to edge up. Then, traders shifted their focus to statements by Fed officials. They noted that the U.S. Central Bank would keep interest rates elevated for longer to continue fighting inflation despite the steady ebbing of inflation. Thus, the Fed's current policy stance remained hawkish, which prevented the risky assets from extending gains. As a result, the euro and the British pound came back under pressure and got stuck in a sideways range. Today's macroeconomic calendar includes data on British retail sales. Economists forecast the UK retail and core retail sales to increase by 0.3% and 0.5% respectively in October. On an annual basis, retail sales volumes are anticipated to fall by 1.5%. In addition, ECB President Christine Lagarde is set to speak today. However, all eyes will be on Eurozone consumer prices. Euro area annual inflation is expected to be 2.9% in October 2023, down from 4.3% in September 2023. Core inflation, excluding energy and food costs, is estimated to remain above 4%, which may boost demand for the euro and push it up to a new one-month high. As for US statistics, it's worth paying attention to building permits and housing starts. In case of upbeat data, the greenback may well repeat yesterday's scenario and take the lead. Furthermore, traders may take notice of speeches by Fed and ECB members. Their approach to monetary policy is likely to remain unchanged, which would help maintain balance in the market at the end of the trading week. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, the 1.0865 mark acts as the middle line of the sideways range, limited by the levels of 1.0833 and 1.0893. A decline followed by a false breakout at 1.0833 will create a strong buy signal, thus bringing the euro up to 1.0865. If the price breaks above this level, the European currency will have a chance of rising to 1.0893. Moreover, it may extend gains to 1.0922 and 1.0944. At these levels, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0865 and 1.0893 can be considered only amid a false breakout. The lower boundary of the range at 1.0833 can be seen as a target for bears. If the price fixes below this mark and tests it from the bottom up, the volume of short positions will increase, dragging the euro down to 1.0802 and 1.0774. At these marks, it will be possible to go long on a rebound, counting on an intraday correction of 25-30 pips. Speaking of the British pound, it is trading around 1.2411, the middle line of a possible new sideways range that may serve as a basis for further gains. If bulls gain control of 1.2411, it would be a wise decision to go long in the hope of a rise to 1.2451 and 1.2502. At the level of 1.2502, traders are recommended to go short on a rebound to make money on an intraday correction of 30-35 pips. Going short at 1.2451 and 1.2411, the upper boundary and the middle line of a potential sideways range respectively will be relevant only in the event of a false breakout. In this case, the pound sterling is likely to dip to 1.2375 and probably 1.2340. A false breakout at these marks will make it possible to buy the pair. Long positions on a rebound can be opened at 1.2304 to catch an intraday correction of 35-40 pips. Good luck and have a nice weekend.